Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, May 16th, 2021. Time for our weekly video update. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market newsletters. You can see our honor roll or top 10s over the years and our disclaimer there. Just want to let you guys know we also have a Woodson Wave Report subscription service, annual and monthly. By the way, it says daily reports. There are times I put out, 2 a day, more than 1 a day, and I think virtually every day this last week we had 2 reports, one pre-market open and one post-market close, to keep our subscribers up to the minute of where these short-term moves are coming from. But I want to start today with, and before I forget, I want to thank you guys for your patronage to the channel. Remember to hit the subscribe button, the reminder bell, and the like button, which is down there. But we will get rid of that, and I think we have there's a like button like that down there. Sorry for that video not playing out. But we want to start today by just a brief look back at the longer term on the S&P. This is a cycle degree. You can see primary wave, 1 up, 2 down, 3 to the expanding triangle, 4 down to the March 2020 lows, and then 5 up. Wanted to let you know this spiral, or this Fibonacci multiple from the 87 lows, stopped the market for a year and 9 months when it hit this multiple right here in September of 2014. You can see the sideways to down action. And then again, it hit this multiple here, and it basically caused the expanding triangle, lower lows, higher highs, and it ended at the March 2020 low. That was a period of 2 years and 2 months, and here we are at the next one, which was late April, early May of 2021. That's either a completed 5-wave pattern or just 1 of 5. We'll again have to watch this decline as it develops from, in the S&P, the May 7th high. So that's the overview. That's where we're at. We have this completed 5-wave pattern up from that wave 4 low, and we'll see the degree of the decline. Okay, let's get into the action this week. We're looking at S&P, Nasdaq, the Russell or the IWM, Tesla, the dollar, and Doge. So on the S&P, I want to focus from the May 7th high. We have a completed 5-wave pattern to the downside here. 1, 2, 3, 4, 5. Okay, I want to see about the retracement on the way up. It looks like a series of first and second waves. Okay, there we go. Again, you can see it's like a broken record here. We're between the 618 and the 786. If this is wave 1 down and this is wave 2 up, let me see this 3-wave bounce as far as how it is developing. As far as C equals A, that would be A up, that would be B down, and that would be C there. Let me label that for you guys. On the move up, we've got A up, B down, and C up. We're going to change that degree of trend because it's not intermediate. Let's just make it sub-micro. It's a smaller degree. Okay, so C gained equality with 1 here at 41.58. It went past that. The next multiple is the 1.618 at 42.02, and that happens to be near the 786 at 41.99. Okay, so if this C wave up continues tomorrow, Monday, look for it to stop there. Okay, if it goes above the all-time high on May 7th, which I believe was 42.38, then we're wrong. That's our make or break. That's the beauty of Elliott Wave. Okay, this is 1 down and 2 up unless or until it breaks above this high. Then we're wrong. Okay, so that's where we know. So that's where we are short for our newsletter subscribers in all the indexes against their all-time highs. The Nasdaq and the S&P and the Dow. Okay, so they all have different all-time highs as of right now, but we're short all three at all 3 degrees of trend. near term or short term, intermediate term, and long term against that high. That's our make or break or stop loss, if you will. Okay, this is the 10-minute bar. I think I might have a little schematic of that. Well, we have a 5-minute, which is basically the same. Okay, there's the all-time high at 42.38. That's our make or break in red. You can see our 5 waves down to the May 12th low, A, B, C up. And you can see those targets there, 42.02, 42.05. Right there is a cluster of multiples where if C wants to go higher, that's where it could go. And you see it broke just above the Fibonacci 618 retracement. For what it's worth, if this is complete at Friday's high, from that high, then here's our wave 3 down targets, which is right at 4,000, and a Fibonacci 1.618 multiple makes 38.88. Of course, if this goes higher into this 4,200 area, those targets would be a little bit higher. Okay, so that's the summary of the S&P from the all-time high, make or break at the all-time high. Otherwise, we're expecting wave 3 down. The market will tell us early this week, hopefully as early as Monday. We'll see how that plays out. Okay, I want to look at the Nasdaq. Sorry about that. Nasdaq made an all-time high right here on April 29th, and you can see 5 waves down here. 1, 2, 3, 4, and 5. That's one. You can see we got the divergence here. Here's that May 7th all-time high in the S&P, and we have divergence with the Nasdaq. It did not make a new all-time high. Instead, it started wave 1 of 3 down. You can see we've got 5 waves down here and a second wave up. Okay, we can get retracement. Let's do the retracements first, and we'll do the extension. Okay, let's see what we have for retracement of this first 5 wave decline. There we are, and we're sitting right at the 50% retracement. Perfect. Wave 2 right there. And then we've got another developing 5 waves down. Let's just see what that retracement is. Okay, we can get this to the start of 1 of 3. Okay, there we go. There's one down, as you can see, and there's A, B, C up, and that's just above the 50% between the 50 and the 618. The 618 retracement, for what it's worth, is 35.14. So it looks like we have a series of 1s and 2s developing in the Nasdaq. Of course, we got a make or break up there at the all-time high on April 29th at 14,211. Let's do the extensions to see where we may expect wave 3 to go. Okay, there's 1 down. There's 2 up. And you can see, well, see, that can't be 3 and then 4 because 4 would be, or would it be higher than 1? Yeah, just barely. Okay, so we're looking at 1, 2, and then the third wave subdividing or extending. 1 down, 2 up, and then 3, 4, 5. The reason I say we'll know early is because these indexes look like they're putting in a series of first and second waves. You know, at 1 degree of trend, then another degree of trend. So if this holds, then we should expect a third of third wave, which would be pretty powerful. So either it's wrong and it goes up and breaks our make or break, or it goes down hard. So that's why I say early this week, possibly as early as Monday. Let's look at that summary of the Nasdaq. Oh, yeah, I regress. Okay, I wanted to go back here. The Nasdaq is turning on that Fibonacci sequence from the March 5th low, which was 1 day later than the S&P. So we applied that Fibonacci time spiral to the Nasdaq, and it's hitting right on. You can see the first 13 days in the sequence pointed to 318. We got a -2 on slippage there to 316 high. The next one, a Fibonacci 21 days, pointed to 326. We got a low, wave 2 low on 325. The next one pointed to 48, and this is all 46, 47, 48. You could put it up here and say it counted a high and missed by 1 more day, or the low it missed by 1. Here it would miss by 2. It's really irrelevant. It's calling turn points, and this was long sideways action. Then the next date in the turn sequence was it 55 days later, 425, bang, there's a direct hit. That's not a minute off, it's just dead on direct hit. That's our make or break. That's 5 of at least 2 degrees of trend, if not 3. You can see then we start developing 1, 2, 3. This is 1 of 2. I'm sorry, this is 1 of 3, and that's 2 of 3. This is a few days old. And the next turn date in the sequence is June 2nd. So we're going to see if that, if this thing moves to higher highs and marks another high, or it goes down to a low. But that's our make or break. Again, we're short at all degrees of trend against the all-time highs in all indexes. Okay, let's go to the IWM, which is the ETF for the Russell 2000. That index made a high on March 15. Again, you can see a series of 1s and 2s. We got a 1 here, a 2 up, and then looks like another 1 of 3 developing as it extends. Okay, let's get the Fibonacci retracement on that first wave down from the all-time high. And there it is. You can see 786. And then there's the let's fool most of the people most of the time and make most of the people lose most of their money most of the time right there. Those people who had a stop right above the 786, they started getting wise. They're not taking it to the 618 or the 500 or 382. They put their short, they put their stop there. They wipe them out and then they take it down. Oh, you're short? Oh, sorry, you're stopped here, and oh, you were right, but we took your money. Interesting. It's not easy to trade this, but because they're doing tricks all the time. But that's wave 1 down, as you can see here. That's 2 up, and this looks like 1 of 3. Again, it's an extension, so we should be seeing a wave 3 of 3. We don't have to remove that. We can just move it to get the retracement of the next or the current decline from, there we go, 1 of 3. That's pretty close there. And let me move that to get a little more exact. There we are. You can see this second wave so far has retraced 50% at 221.27, right on it in the Russell. Let me see how that ABC looks here. Let's get that extension for this correction. There is A up right there. There is B down right there. Pretty close. You can see it's right on the 1618. So got a high confidence level here that this is a second wave. Okay, there's 1 and 2. We kind of got it out of the picture there. There's 1 down. There's 2 up. 3 is subdividing. Here's 1 of 3. There is 2 of 3. Okay, let's get an extension on that if that is the case. Let's see where 3 of 3 should go. We need the Fibonacci extension tool, and there it is. Okay, this is 1 of 3 down here. This is 2 of 3 up here. 3 gains equality with 1 at 202. A more likely scenario is a 1.618, and you can see we got 190 there. Okay, so we got 1, 2, and then 1 of 3, 2 of 3. We should be entering a 3 of 3. Again, we should know early in the week. Hopefully Monday we'll see how things go. Maybe even get a clue on Sunday night futures. Let's move over to the dollar index. This is a weekly log chart. We're looking at the 2008 low. We have a 1 up, we have a 2 down, a 3 up, a 4 down, and a completed 5-wave pattern to the upside into the December 2016, or maybe it's January 17 high. All right, then we have an A down, a B up, and a developing or possibly completed C wave down. Let's look at that for Fibonacci extension for A to B to C. Okay, here we've got our all-time high. Here we've got the A down, the B up. You can see C equals A at 87.36 and a 1.618 at 77.47. Let's see what we get for a retracement of this 5 waves up from the 2008 low. Here's our completed 5-wave pattern right there. And you can see right there, right at that level at 87.44, that's where we get a 50%, and that's where we get C equal to A. And where is that 1.618 at? Where did that go? Let me see this here a second. Get on settings. All right. Oh, here it is. It's right on the 786 at 77.47. So we should see wave C go to here or here. Okay, either at the 87.44 or 77.47. All right. That correction appears almost complete, but not quite. Okay, we'll watch that play out. Very interesting on the dollar, DXY. Doge, let's look at Dogecoin. All right, going back to January of this year, we have a 1 up, a 2 down, a 3 up, a 4 down, 4 low, stays above the wave 1 high, and 5. We have a completed 5-wave pattern, and we've got a correction developing or complete. Again, let's look at that the same way. Let's look at a retracement of the entire 5 waves up on Doge. And you can see there it hit right near the 50%, which was 48.74. This could be A down, B up, and C down. If it is, again, let's do our Fibonacci extension. 4 wave C to A from the wave 5 high. This is A down. If this is B up, C equals A all the way down here at 24.70. And that's in the 4th wave of 1 lesser degree, the previous 4th wave. That's usually where these corrections go. That being said, this one's already there. Okay, you can see right in there, and it hit near the 50%. So this is going to have to be watched very carefully. This is a 1-hour bar chart, and let's see what we have developing here. Let me see what this looks like. We're going to pick this apart, get into this decline. And I'm doing this cold. There's 1, 2, 3, 4, 5. There's 1, 5. That could be 1, 2, 3, 4, 5. That could be, yeah, it could be a 5, 3, 5. Okay, yeah, well, this decline looks like, and that looks like 5 waves down. So the 5 waves are to the downside. Looks like this correction is still playing out. Again, look for those targets where we had 24.70 would be our first target. The first key would be to take out this low here at 48.74, and then this low here, which is, there it is, 56.80. No, that's not it. It's right here, 44.83. Then we're on our way to 24 once that low is taken out. Again, you can see all of that action here. That's probably where to go to, where all the action, the previous action was. Okay, that's it for Doge. Let's look at Tesla. Here is our daily chart of Tesla. Again, from the January all-time high of 900, we have 5 completed waves down to the March 5th low of 539. We have a completed 3-wave correction. Let me get that retracement in there for you guys. Okay, we'll see where that went. And that is, get on there. There we go. Right between the 618 and the 786. Okay, so that's an A. We're looking for an ABC. 5 down, 3 up, 5 down. Okay, we've got the 5 down, we've got the 3 up, and this is the beginning of the next 5 waves down. Did I knock that target out? I believe it was 418. Let me see if I can get that C target in here again. There's a down. This may not be to the dollar or to the penny because of the accuracy or lack thereof of me hitting the actual one. 415. It was 415 or 418, somewhere like that. But this is a developing 5-wave pattern to the downside, and it just broke out to basically give us validation of the count. We can look at the market from this April 14 high. This is a daily chart. We're going to go to an hourly chart. You can see here, here's that April 14th. We have a leading diagonal triangle for the first wave in red. We have a second wave up. I did a detail of these internal wave counts so you guys can see it's definitely 5 to the downside, and the retracements are 3 waves up. You can see this is an A, B, C, and then we got another 5 down. 1, 2, 3, 4, 5 to complete the third wave in red. Okay, then we've got an A, B, C, 3 waves up. And again, 1, 2, 3, 4, 5 to complete wave 5, and then we're getting an A, B, C up. So this could be 1, 2, 3, 4, 5 in the red. It could be the first wave down of C, and then we'd get a 2 up and a 3 down and a 4 up and a 5 down. So if this is completed, let me get a retracement on that for you guys, okay? It could extend. It might not be over yet, but if it is, because I can count 5, 3, 5 and 5 waves down, okay? Because I can count on the red a 1, a 2, a 3, and a 4, and a 5. And all of these down go 5 waves, and all these up go 3. Okay, so if this is 1 of C, then we'll get a 2. Our Fibonacci retracement levels, the 382 is 644. The 50% is 670. The 618 is 696. And we got to include the 786 because of the way they're trying to get everybody out. That's at 773. Okay, so we'll see if this wave extends further. You know, anytime we, or whenever we take out this recent low at 559, that means it's extending. Until then, expect this to go up, and this could just be the very beginning, A, B, C, and then an X, and an A, B, C. Let's see where that goes. And it could be just barely developing. But let's get an extension on that. Okay, and there we go. There we go. There's where that one equals the previous one at 608. And I'm sorry, yeah, that's 1. Where is our 1618 hiding here? Let me see if we can get into settings. I'm just not. Oh, okay. That's the problem right there. Okay, there we go. All right, and there's the 1618. And this could just be A, B, C, and it goes higher. Okay, look for that. We'll see how that plays out, okay? But there's our targets there. There's our Fibonacci targets of that entire 5-wave advance. Again, a drop below the recent low indicates that this wave is extending. All right, we'll have to watch that play out probably as early as Monday. Let me see what else I have for you guys here. We did the Nasdaq with the Fibonacci time spiral with the direct hit. Next turn date is 6/2. We'll see if that marks a high or a low. It's looking like it's going to mark a low. There's our 5-minute bar on the S&P from the all-time high. Make or break up there. And our targets down here. I know I had another one for you guys. Let's see. There's the hourly bar, excuse me, with those Fibonacci turn dates. This one hasn't been updated. That marked that high there, and then there was another higher high, as you know, on 5/7. And the next turn date in that sequence is 6/1. That may be done. We'll see. It may just played out to that high. We'll have to watch further price action from there. And what else did I have here? We did the weekly. There's the hourly. There's that one. There's that one. Okay. So we'll see how this next week plays out. Should be exciting times. We could be looking at a wave 3 of 3 to the downside. Conversely, if we're wrong, we'll know it when and if it passes the all-time high at 42.38. Okay, until next time, take care, everyone.